Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to another episode of Trends with Benefits, and continuing along the idea of our No Jargon Bitcoin special series. Our guest today is Jake Chervinsky, General Counsel at Compound Labs, also strategic advisor for Variant Fund. And he works on regulatory policy for the crypto industry through the Blockchain Association in Washington, D.C. Jake, thank you very much for joining us today.
Ed, thanks so much for having me. This will be fun.
So, one of the things that kind of comes up in a discussion about crypto and Bitcoin in particular, particularly with people that aren't so ingrained in the industry or are not too familiar with the industry, is this idea that crypto, it's only used for bad actors. And there's this issue of tainted coin even. What's your perspective of that? I mean, are there bad actors in Bitcoin?
To answer your question directly, not really. But let me step back for a second. I think you're absolutely right to identify this as a pretty common narrative about Bitcoin, right? A lot of people think that Bitcoin is just for criminals. And if you're not doing anything wrong, then why wouldn't you just use the traditional financial system and use US dollars like every other ordinary normal person does? And I think that idea is founded in a very old reality from maybe 2012, 2013, when in truth, a lot of the activity on the Bitcoin network was related to the Silk Road, a darknet market where a lot of people were buying illicit substances. So I think there was a time where Bitcoin attracted folks who were trying to engage in illicit activity online. That is not true anymore at all about Bitcoin as it exists today. There's a lot of analysis now that the industry has matured a lot about what the nature of Bitcoin transactions are. And we get a lot of that data from forensics companies like Chainalysis, for example. And what Chainalysis is saying, based on their report for last year, for fiscal year 2020, is that less than half of 1% of all Bitcoin transactions involve illicit activity in some way. I think they pegged it at something like $10 billion in total illicit activity for the year of 2020. That number kind of sounds like a big number, but compare that to the estimates of total transnational criminal conduct in finance. The number for 2020 is about $2.2 trillion. And the percentage of total transactions in traditional finance that are estimated to be illicit is usually somewhere between 1% and 2%. So, maybe 2 to 4 times as much as what we're seeing in Bitcoin. So I think this is a sort of an old idea that is still stuck in the minds of some folks who are critical of Bitcoin, but it doesn't actually bear out in reality when you look at the statistics.
Yeah, it was interesting with the latest hack, of the pipeline and this idea that the FBI was able to claw back some of the ransom money that Bitcoin, a lot of people, one of the other narratives is that it is private. You can't really see what's going on there, that they were able to actually claw back some of that ransom money. And this idea that Bitcoin is actually more transparent than a lot of people think, and maybe not a good thing for criminals to use.
Yeah, that's absolutely true. I mean, when you talk to law enforcement, right? If you talk to the FBI who work on these types of matters that involve cryptocurrency, what they'll tell you is they love it when criminals use Bitcoin because it's so easy for them to trace those transactions. And it's interesting you mentioned ransomware because one element of working on Bitcoin policy here in Washington, D.C. is really just sort of being reactive to whatever the latest narrative is, and then having to explain to policymakers why their preconceived notions about that issue are usually, unfortunately, a little bit off base. And this is what we're seeing with the ransomware issue now, where, again, a lot of critics of Bitcoin will say, the only reason ransomware exists is because of Bitcoin and cryptocurrencies. So the solution is to eliminate Bitcoin and cryptocurrencies, right? That's how we solve the ransomware problem. Of course, that's not true at all, right? There was ransomware before Bitcoin. Folks who were doing ransomware attacks were taking payment in US dollars and other fiat currencies. And of course, the solution for an issue like ransomware isn't to ban the money that people are using to carry it out. It's to improve cybersecurity and stop those attacks from happening, sort of at the technical level. And so, yes, this is sort of a challenge for us. But I think the policy reaction, which is to say, ransomware is a problem, let's solve it by criminalizing or cracking down on this entire industry, the vast majority of which is, totally productive, innovation, I think doesn't make a whole lot of sense.
Yeah, I mean, I think one of the arguments against that was, well, it facilitated, or Bitcoin facilitated, it made it much more easy to create these acts and ask, have this ransomware out there and facilitated those actions much more easily. But I guess it's for some of the same flexibility that some criminal organizations like it. I mean, I think there's that technology underneath it, which has a lot of promise for the rest of us.
Yeah, and I think that's the main point that we try to convey when we talk to policymakers about this is you can't blame the technology for the conduct that bad actors carry out using that technology, right? The internet also enables ransomware. We're not talking about banning the internet. We understand that the benefits of this amazing technology outweigh the drawbacks. That technology is a neutral tool that can be used for good or bad, and you don't want to throw out all of the good just because there is some bad, right? That's always how the adoption of new technology goes. The sort of bad actors who are willing to go out the risk curve and use technology that is perhaps less broadly adopted or less reliable will always come to new technology first. That's, I think, why in 2012, right in the very early years, there was more illicit activity using Bitcoin. That's just not the case anymore. And to your point, it is really interesting to see that law enforcement was able to recover a huge amount of that Bitcoin. We don't actually know exactly how they did it, and they're being sort of intentionally covert about what methods they used to obtain that Bitcoin. I think the best theory is that law enforcement seized the servers that this ransomware as a service outlet or enterprise called DarkSide had been using, and that the private keys were on the servers. So it just goes to show if law enforcement does good old-fashioned police work, they can stop criminal activity using cryptocurrency, just like they can stop criminal activity using fiat currency.
So what about the idea of tainted coin? What is that?
Yeah, so the idea of a tainted coin, and some people might disagree with my definition, but from my perspective, the idea of a tainted coin is a Bitcoin or a UTXO, to be more specific, that has some potential illicit history such that the holder of that UTXO, the holder of that Bitcoin, is worried that either the Bitcoin will be seized by the government if it's identified as the proceeds of illicit activity, or that it will raise more compliance concerns for centralized exchanges or custodians or counterparties who they're trying to either deposit that Bitcoin to or transact using Bitcoin with that counterparty, or that there would be sort of like a bifurcated market where you would have clean, innocent, virgin Bitcoins that are valued higher than these potentially illicit tainted coins. And this is something that folks have been worrying about and thinking about for quite a long time, especially because of the anti-money laundering laws that apply to the regulated financial institutions that are active in the Bitcoin space.
So can tainted coin, if it's found out it was used in some illicit activity, couple persons past or transactions past, can that be seized?
So that's a really great question. And I'll give you the usual lawyer answer, which is it depends. It totally depends on the circumstances. And, this is one area where, unfortunately, we still lack regulatory and legal clarity about how Bitcoin interacts with traditional laws and regulations. The asset forfeiture world is extremely complex. You have both the federal government that can pursue forfeiture of assets through either civil or criminal forfeiture, and the standards are different there. You also have the individual states here in the US who can do the same thing under all of their unique statutes and rules and regulations. And then, of course, there are international regulators. Now, I'm a US lawyer, so my base of knowledge is more here under US law, but it's really hard to know, depending on who you are and where you are, and what the evidence is suggesting that the Bitcoin you hold has been involved in some type of illicit activity, what the potential ramifications are. And there are a lot of folks who are trying to work on clarifying that, especially through the idea of defining Bitcoin as money under the law, as opposed to defining it as property under the law. Property in general is much more likely to be seized if there is illicit activity involving that property that's detected. Think as an example of going to a used car dealership and buying a used car and then finding out later that the car had been stolen, right? There's a fair chance that that car is going to be repossessed, whether you knew that it was stolen at the time that you bought it or not. Whereas with money, if you are paid in illicit funds for some service and you didn't know that the funds were illicit, it's much less likely that the dollars you were paid will be seized or forfeited. So that's why there's a movement to try to have Bitcoin defined as money as opposed to defined as property. So I sort of am not answering your question, but answering your question. So I hope that helps a little bit.
Yeah, totally. That was a great perspective. So if you're an individual investor, should you be that worried about that issue, about tainted coin?
I would say yes and no. My hopeful and optimistic answer is no, because I think that Bitcoin should be defined as money for these purposes. And just like you aren't worried about having a $20 bill in your pocket, right? What the history of that $20 bill is, you shouldn't have to worry about the history of the UTXO that you have in your digital wallet. And just as a sort of a funny example, you often hear the statistic about testing paper dollars for cocaine residue. And apparently the majority of paper dollars have some cocaine on them, even though they are circulating, around
The majority
around
of them?
the country. Yeah. So I would like us to look at Bitcoin the same way, right? It shouldn't matter what the history of the Bitcoin is. It is a bearer asset. It represents the value that it represents for whoever holds it at that time. I think, the flip side of this answer, though, is because of this legal and regulatory uncertainty, I think that at this moment, investors do have to at least think about what is the history of the UTXOs that I hold, and will that history cause me some problem if I decide to move those Bitcoins to a new custodian who has compliance obligations, who may ask some questions and freeze that account for some period of time until those questions are answered, just as one example.
Talk about Compound Labs. What are you guys working on? What do you do?
Yeah, sure. So Compound Labs is an open source software development company in the decentralized finance space in the cryptocurrency industry. We are best known for developing the Compound protocol. That is actually an Ethereum-based decentralized protocol that enables interest rate markets on digital assets. So the idea is, when you hold Bitcoin in your wallet, it is a non-productive asset, right? You're holding it in the hopes that it'll increase in value, or that it'll provide a hedge, or because you're going to use it for payment or for something like that. But it itself is not going to increase in value. The way that most folks in Bitcoin have tried to turn their Bitcoin into a productive asset is by lending that Bitcoin through a centralized intermediary, someone like BlockFi, for example, in order to earn some yield or some interest on that Bitcoin. And that's fantastic. That's a great thing for folks to do. But in crypto, we always want to look for opportunities to decentralize. And so the concept behind what my company has been building is a decentralized market for interest rates that doesn't require trusting a third party with custody over your assets. So that's what Compound Labs has been working on.
That's fascinating. The whole idea of DeFi and the potential for crypto in that space. So you said you guys are based on Ethereum?
Yes, that's right.
And there's a lot of different applications being built there. Perhaps you can provide a little perspective of just how much activity is going on in this space, not only with your company, but just kind of broadly. What are you seeing?
Well, DeFi, I think, has become the hottest sector within the crypto industry over the last 12 months or so. Most DeFi is currently built on Ethereum, not on Bitcoin, although there is a huge amount of Bitcoin that has been wrapped and then moved over into the Ethereum ecosystem and is being used within DeFi. But, I think the activity has just been extraordinary. There's an unbelievable amount of venture capital investment coming into the space, new projects that are popping up. I think as a result of how much activity there is in DeFi, the fees that are being paid on the Ethereum blockchain have actually exceeded those being paid on Bitcoin. So, it remains to be seen sort of how the space is going to develop, how the Bitcoin protocol itself will interact with DeFi, whether DeFi will end up being built directly on top of the Bitcoin blockchain, or if we'll stay in this world where you have to sort of move Bitcoin off of the Bitcoin network into some other ecosystem, whether that's Ethereum or otherwise, in order to use it in DeFi. But at least to me, I think this is one of the most exciting developments in the crypto industry, because what we're doing is we're taking the same principles that underlie Bitcoin, which is removing intermediaries from financial services, allowing individuals to engage in financial services without having that intermediary between them, and expanding that to more economic activity than just transferring or storing value, which is really what the Bitcoin blockchain is optimized to do. So, we'll see where this goes. I think it's a really exciting time for the DeFi sector.
Yeah, definitely a lot happening there. One of the reasons VanEck has been spending a lot of time on the space is because of that potential and the potential to be disrupted. So, it's more about just getting ahead of it for us, I think. So you were a litigator before, right? I mean, I guess you didn't start out in the cryptocurrency ecosystem initially in your career.
Yeah, that's right. So I started out my career in compliance and investigations. I worked for a multinational firm called Baker McKenzie. And most of my clients were Fortune 500 financial institutions that had either anti-money laundering or anti-corruption concerns. Some of that was setting up compliance programs. Some of it for me was, investigating potential misconduct and working with the government on investigations to try to resolve those issues. I moved over after a few years, actually took a break from private practice and did a clerkship with a federal district judge, and then moved over to a firm called Cobray and Kim, where I really focused on financial services litigation and government enforcement defense. And that's really where I started working in the crypto industry. I became personally very passionate about Bitcoin. And I ended up doing a lot of SEC facing work and CFTC facing work, some FBI and DOJ investigations and enforcement as well. And just got to the point where I felt like this is the most exciting thing happening in the world right now. And I really just want to focus on this full time. So in 2019, I decided to make the jump into the industry full time and joined Compound Labs as General Counsel. And it's been a great time ever since.
That's great. You mentioned the SEC and the CFTC, and I guess you also work with different legislators as well. I mean, through your affiliation with the Blockchain Association. I don't know, perhaps you can tell me a little bit about that. Just kind of curious, in a very general sense, what regulators think of crypto. That's a very broad question, but just generally, what's your take?
Yeah, for sure. So you're right. I work pretty closely with the Blockchain Association. Compound Labs is a member, and I am our representative in the association. The Blockchain Association is a trade association that includes most of the biggest US companies in the Bitcoin and the crypto space. So that's, large exchanges like Kraken, it's custodians like Anchorage, it's venture capital firms like USV and Polychain and others, a lot of DeFi companies, including Compound and Uniswap and Aave and others. We focus on Bitcoin policy specifically, but also policy for the entire crypto industry, talking to regulators in the executive agencies here in DC, and then also talking to members of Congress and other leaders in government. And I can tell you, like I said before, a lot of the work is reactive. A lot of it is misinformation that's making its way up to the Hill. And, we see that come through some of these Senate and House committee hearings where you hear members of Congress asking questions that convey that perhaps they don't have the full picture about what's going on with Bitcoin. We spend a lot of time trying to educate them on the space. And then in addition to that, we work on a lot of the regulatory issues where there is a lack of clarity and where that lack of clarity is stopping the industry from advancing. So just as an example, we work with the SEC on the Bitcoin ETF, right? Trying to explain to them why now is the right time for them to approve an ETF and also to hear out their concerns and then make sure that industry is engaging with them to address those concerns so we can finally get past this sticking point of getting an ETF approved.
So you mentioned something that made me think about the way Bitcoin is regulated right now in the US. And right now there's not much in the way of federal regulation, right? So it's left to the states to kind of decide and set up their own set of rules, if you will. Do you think that is one of the major then roadblocks for, say, Bitcoin ETF or some more clarity around Bitcoin?
I definitely think that's part of it. And I think that's true to an extent. I think it's not true as applied to every regulatory framework that we have to think about in Bitcoin. And this is where things get really complicated, right? Bitcoin touches essentially everything that you can imagine in the world in some way, right? And that's because Bitcoin is an asset that has been financialized by actors in the financial system that are subject to a very broad range of different regulations on both the state and the federal level. So when you reference the states that are sort of left to their own devices, mostly that has to do with the form of depository institutions or custodial intermediaries that are taking deposits of Bitcoin from customers or from investors. And that's where we're seeing a lot of innovation in places like Wyoming, which created a brand new form of depository institution, the special purpose depository institution. And we're seeing innovation in other states as well. But the federal government still has an extremely important role to play in defining all of the regulations that will apply to Bitcoin. And an example of that is the anti-money laundering regulations, which are in many ways a uniquely federal issue, right? The Bank Secrecy Act is a federal law. The states have basically no say over Bank Secrecy Act enforcement or compliance obligations, or what even the entities that they regulate have to do in order to satisfy the Financial Crimes Enforcement Network, FinCEN, at the Treasury Department, which enforces the Bank Secrecy Act. So we need clarity from the federal government, in addition to the states that are doing some work here. And I'm hoping that will come in the next few years. Like I said, for the last 4 years or so, we had an administration in the Trump administration that did not really have a national policy toward Bitcoin. So each executive agency was left to its own devices to decide how they wanted to approach this asset class. And that's where you see the opportunity for someone like Jay Clayton to just sort of decide that he's not a fan of Bitcoin and he's not going to allow his agency to be constructive or make any progress on these issues. But then at the CFTC, you see someone like Chris Giancarlo or Heath Tarbert, the back-to-back chairs of the CFTC, who were very constructive on Bitcoin and did push forward the space in terms of approving new derivatives products and exchanges to trade those derivatives in the crypto industry. So the hope is that the Biden administration will be a little bit different, that will get some tone from the top about how the government as a whole should approach this space, hopefully in a constructive way. And that will bring together all of these various leaders of the executive agencies that have authority in this space to start working out some of these issues that are holding us back from moving forward. Yet to be seen if that will happen, because the administration is only about 5 months old now, not even. And there are still roles that need to be filled and still a lot that needs to be worked out. So I think a lot of this will unfold in the next 12 months or so.
So do you think subjecting crypto businesses to certain reporting requirements and AML requirements, you think that will ultimately help the industry or inhibit its growth?
It depends on what the regulations look like in particular. Crypto companies are already subject in many cases to the Bank Secrecy Act, exactly like they would be if they were transacting or taking deposits in fiat currency instead of in Bitcoin. The question is whether the government decides that those regulations need to be expanded to cover even more activity in the Bitcoin space than it covers in the traditional financial system. I think that would be a huge mistake. I am a strong believer that we shouldn't single out Bitcoin for special treatment. There's a concept that underlies theories of regulation, which says same risks, same business, same rules. And that's kind of how we think about this, right? Bitcoin poses the same types of risks as US dollars. It's the same type of business. It should have the same rules as we have for something like cash. And that's something that we advocate for here in DC. There have been proposals, though, that I think would be quite harmful to the space, including one that was on the docket in December, a proposed rule from FinCEN that was really pushed by Secretary Mnuchin just in the waning days of the Trump administration, on his way out the door, tried to launch something we affectionately call midnight rulemaking, right? Which is trying to force something through without the proper process, a few minutes before you're out of a job. And that proposed rule would have imposed very onerous requirements on Bitcoin companies. And most importantly, it would have restricted their ability to allow their customers to withdraw Bitcoin to their own wallets, would have restricted their ability to take custody of their own Bitcoin. And hopefully you'll agree that is an essential element of Bitcoin. I mean, in a way, that's what this is about. It's about having genuine property rights over a natively digital asset, right? Even though you can't hold it, you can't, put it in your safe in your basement, you can have true ownership and control of that asset without anyone else being able to take it from you and without being subject to counterparty risk. And a lot of the fears about Bitcoin being used for illicit activity has led to this idea that government should restrict the ability of people to take possession of their own assets. That's something that we are arguing against very aggressively here in DC, and that I hope won't happen. I do think it would be quite harmful, not only to the industry, but also to our financial privacy and property rights. So we'll just have to see if the Biden administration will hopefully take a different view from what Secretary Mnuchin did.
Sometimes in talking to people, you hear the objection to Bitcoin saying, well, the government's just going to come down and crack down on it and ban it. And, people in the Bitcoin space will say, no, that can't happen. But we see it happening in China. I don't know. What's your perspective? Can and do you think that the U.S. would at some point go, all right, enough's enough, no more Bitcoin for anybody?
Well, I think it's foolish to say that they can't, because obviously they can if they want to, if they decide to. But I do think it's fair to say that it's extremely unlikely, especially in a country like the US, that we'll see any kind of truly restrictive action like that. I think the big fear is a Bitcoin ban. And this is something that is talked about somewhat frequently. And we even hear that idea thrown around sometimes in congressional hearings. So it's not crazy to at least have that on the radar as a possibility. But the truth is, I think there are so many blockers to Congress ever taking action like that. First of all, it would require congressional action to have a really effective ban like that. At least my personal view is I don't think that the executive agencies have enough authority delegated to them by Congress to ban Bitcoin from any type of use or holding here in the US, right? For there to be a law that says you and I can't own Bitcoin, it's illegal to own Bitcoin, that would require congressional action. This Congress is very unlikely to take action on anything, let alone something as obscure as Bitcoin, right? We have an essentially deadlocked Congress. Although the Democrats control the Congress, the Senate is split evenly. There are Democrats who simply would not get on board for something like that. And I think that Republicans in general are against restrictive regulations of that sort. So I think it's just unlikely from a political perspective that this Congress could get it together to take that kind of action. And then I think there are so many countervailing reasons why they wouldn't. There's so much investment in this space. There are so many constituents and businesses here in the US who are moving forward and innovating and really delivering a lot of value. I think it would be a huge mistake for policymakers to take that kind of view. I also think that there are constitutional reasons. As I said, there are First and Fourth Amendment concerns, freedom of speech issues, financial privacy, property rights issues that I think a very restrictive prohibition, frankly, even something like what China is doing now, I think there would be a very strong constitutional challenge to that here in the US. So I don't anticipate that we're going to see something like that. The only qualifier I would give to this is you never know what can happen if there is some truly horrendous event that creates the political will, even if it didn't exist before, to take some action that seems very outrageous before that event happens. And the best example of this in recent history is 9/11. I think there is a very low probability that something like the Patriot Act would have passed before that attack. But afterward, indeed, the decision was made to sacrifice to some degree our privacy rights in favor of national security. And you could imagine that if there was some type of similar event of that magnitude that was enabled only because of Bitcoin, maybe then there would be some real risk of onerous regulation. It's just hard to predict that kind of thing. And I think even in that case, hopefully we would be able to convince folks that, again, you don't blame the technology for something that bad actors do using that technology. So it's certainly a live issue, but I am not that worried about something like a ban. I'm much more worried about restrictions that change the character of Bitcoin into a custodial asset, which is much less interesting than the Bitcoin that I think we're all excited about and committed to now.
Do you ever envision the U.S. adopting it as legal tender like El Salvador?
What a great question. Honestly, I haven't thought about it that deeply. I think, probably that fact conveys that I don't think it's terribly likely in the near term. I think if it happens, it likely would not happen in our lifetimes, is the way I would put it. Folks in the Bitcoin space have spent a lot of time, and many of them know a lot more than I do about monetary policy and the connection between the US, our position geopolitically and the connection with the US dollar. And I just think it's very hard to imagine the United States intentionally undermining the US dollar as the global reserve currency. The exact opposite is what policymakers are focused on right now. The question is, how do we make sure that the digital yuan is not a threat to US dollar hegemony in the world? And I don't think that Bitcoin really plays a role in that conversation. That conversation is much more about the digital dollar or a central bank digital currency versus the private sector stablecoin solutions that we see in the market now. There isn't really a whole lot of discussion about Bitcoin as anything other than a gold-like store of value that folks, would buy, much like they would buy gold as a hedge against inflation or for the purpose of speculating. That's sort of the political view, to the extent that there's a positive view of it. I can't imagine it becoming legal tender in the US, at least as long as we're alive.
Do you think that central bank digital currencies can coexist with Bitcoin? Or do you think once the US and China come out with their digital currency, that just kind of limits Bitcoin's use?
I definitely think they can coexist. I think they already do, and I think that they certainly will. I think it's a very different use case in many ways, right? I think that just like Bitcoin is a complement to the US dollar, Bitcoin would be a complement to a central bank digital currency. There are people who will not want to transact in a CBDC, just like they don't want to transact in dollars now. Bitcoin will be there for those people. Bitcoin will also be a hedge against inflation, and there will be any number of reasons why folks want to own and transact in Bitcoin. I don't think that competes very much with a central bank digital currency, except to the extent that it competes with fiat currency to begin with. And there are a lot of different views on the long-term question of whether Bitcoin destroys all fiat currencies, or if it does find itself more in the role of digital gold for the long term, something that is an investment, a store of value, but not something that's ever going to replace our day-to-day medium of exchange. I'll leave that up to the listener to decide sort of which view they have. But no, I think we're going to be working with both of these systems in parallel for a very long time to come.
So since we're a podcast about trends, I'm going to ask you about one long-term trend you see playing out over the next year or several years. Something top of mind for you?
Well, I guess I already mentioned this issue of other countries deciding to adopt Bitcoin as legal tender. I do think that that's going to be a big one that we'll watch. I'll give you one more since we already covered that, which I also mentioned a little bit earlier, which is the ESG narrative around the environment and the impact of proof of work mining on climate change. The Biden administration has really done a 180 from the Trump administration's perspective on climate change. Right? We're back in the Paris Climate Accord. Basically, every executive agency in the federal government now has a climate change mandate. Even some agencies that you wouldn't normally imagine would be related in any way to the climate. For example, the SEC itself, right? The Securities and Exchange Commission has a climate mandate. So I think that the challenges that we have in explaining why proof of work mining is worthwhile, even though it uses a fair amount of energy, which can't be denied, right? It does use a fair amount of energy. I think there's going to be a lot of need for us to dig in more depth to explain why that is a good use of energy, and also why the energy mix that is powering the Bitcoin network is more renewable than a lot of people give it credit for, why it's pushing renewable energy more, why it's becoming more efficient, how we can get more transparency into mining. I think that issue is going to have a huge impact on policy going forward. I also think that, an issue that we haven't really started exploring in the public forum yet related to this is proof of work versus proof of stake. Proof of work is what most people know because most people know Bitcoin, but especially as Ethereum, which is sort of emerging as the leader in the smart contract space, as Ethereum makes its transition over to proof of stake, I think there will be a lot of arguments that sound like, why do we need to use all of this energy when there's this perfectly fine alternative consensus mechanism that we can use that uses so much less energy? And I know that, folks who are deep into Bitcoin are already thinking to themselves, how awful an argument that is. And they've got all the answers ready to go about the flaws of proof of stake and the importance of having, the external commitments of energy in order to secure the network. I think all of those arguments are compelling, but we need to package those arguments better for a policy audience who are going to see things like Dogecoin, for example, potentially transitioning to proof of stake. That's something that we've started hearing more recently, that another way that Dogecoin can pump the price is by adding smart contracts and going to proof of stake, right? And who knows if that will happen, but I do think that this is part of the climate change discussion that is going to become much bigger of an issue as people learn more about proof of stake as time goes on.
All right, so towards the end of our podcast, we do a quick little speed round called Trend or Fad. I'm going to ask you about 3 different things here, and you can just mention trend or fad, whatever your take is. Investing in collectibles, trend or fad?
It's a trend, right? People have invested in collectibles since time began, right? When I was a kid, I collected baseball cards. So did my dad. So did my grandfather. Right? Collectibles are absolutely here to stay. If what you mean is digital collectibles, my view is that's also a trend. I think there's no reason why a natively digital population like Gen Z, I don't see why they wouldn't want digital collectibles, just like I wanted baseball cards when I was a kid. So I think that's here to stay.
Hybrid work weeks, trend or fad?
I'll say trend, and I say that more optimistically than anything else because I love the hybrid work week. So I think I think we've all learned more effective ways to work in the last year. I think that's a silver lining in an otherwise pretty dark time. So I think that's here to stay.
And lab grown meat, trend or fad?
That one I'm less sure on. I think I'm going to go with fad on that one because I'm not sure how big the audience is for it, and I'm not sure that the economics really work at scale. But I have low conviction in that belief.
Jake, thank you very much for your time and your great explanations. How do people find you, reach out to you, learn more about what you're doing?
Sure. Well, thanks for having me. This has been a blast. I would say folks can find me on Twitter. I'm probably on Twitter a little bit too much, but I'm at Jake Chervinsky on Twitter. So follow me there. My DMs are open. I love hearing from people, so feel free to shoot me a message. I also am writing a quarterly newsletter on crypto policy and regulation. It's on Substack, so you can find me there as well. That's jchervinsky.substack.com. So check that out too.
Thank you, Jake.
Awesome. Thank you.
And thank you for tuning in to another episode of Trends with Benefits.